Good day, everyone. Well, we have a chop and slop situation. This bounce, as we said, is quite weak, one of the weakest since 2012. And, so we're going to just continue to, I guess, slop around here until the market can make up its mind. But that said, there seems to be more downward selling pressure at this juncture. I mean, the top was put in months ago, and you had divergences in the major indices as well. And so now we have a second slide in the major indices that started basically late last year. And it looks to me like, based on the lack of leadership, that this market is going to stumble around a bit before it heads lower. So in other words, we might get reaction rallies and whatnot, but ultimately, unless these leaders can start showing some sort of improvement in their patterns, I think the next leg is going to be down. We only have basically, there's just a smattering of names like Facebook and Google that are showing any signs of life. With the majority of these names, the FANG names, Netflix, Amazon, Apple, they're just getting pounced, and they're well off their highs. So right now, we're also not seeing, we're seeing a continuation of the sliding commodities, which has been with us for quite some time now, and the whole Commodity Research Bureau Index is at multi-decade lows. The oil slide continues as well. Yes, there's talk about countries deciding to band together to reduce production, and those rumors sent oil higher. But again, the overall downtrend is still intact when it comes to oil and various commodities. Basically, it's a market where these kinds of bounces can provide some short sale opportunities, and of course, even on the long side, there can be opportunities, but the windows are very brief, and you have to be nimble, very nimble, which has been true to form over the last couple of years, 2015 especially. Where we just don't get any meaningful trends that can sustain themselves, and then even the downtrends are a bit. There's many downtrends that are very shallow, and then once in a while you're going to get something that happens very quickly, like last August. And as a consequence of that, they're removing SPY and sell stops from the equation, but that's not going to correct the problem. Although your local brokerage might still allow stops within their own network. So, and I'm not sure how many people this is going to actually affect. But obviously, having stops in our necessity. I know that Charles Schwab, will continue to honor buy and sell stops, and therefore I would imagine that other major brokerage outfits would as well, just to keep competitive. That said, the whole world is not looking good economically, and you have Draghi trying to talk up more easy money going forward, and that's all the central banks are chanting these days in unison. It's more easy money, and I think the Fed is going to have no choice but at some point to create a sort of QE4. Or at least go shift into negative interest rates. And when they do that, capital may have no choice but to flow into equities just for the small gains that can be derived from equities. Negative rates are also going to put a real strain on pensions and all. It could create a pretty bad domino effect based on the way the U.S. is structured. So. We'll have to see, what the Fed decides on that matter going forward. But right now, their position has been to keep a close eye, and they're aware of the slowdown and the recessionary nature of global economies. So they're going to be gentle about any rate hikes. They might not hike at all this year. They might just keep interest rates pat. But I think that the next tool in the tool chest probably is going to be shifting toward negative interest rates, and that could surprisingly cause a stock market that moves higher simply because of the capital flows. But at any rate, we'll have to watch and see. And it's always an interesting market, especially given the tone of central banks, because they are digging themselves into a deeper and deeper hole, with all the money printing that continues. And the thing of the matter is that I think Bill Gross, he was the former hedge fund manager of PIMCO, the world's largest, where he ran the world's largest hedge fund in bonds. And he's correct when he says, what is this doing? It's not doing anything productive, and it hasn't. And yet central banks still are stuck on this broken record of wanting to make money even easier and continue to reduce rates. But with that, I will turn it over to Gil, and just keep a nimble stance on things, because it's required in this market. And also, I mentioned in a report I just sent out about the BBM model. It went back to cash. It hit its fail-safe. That fail-safe is about a break-even fail-safe again. But, of course, yesterday, the instruments like UVXY, TVIX were up something like 11 or 12% intraday, making a total gain of about 15% on the whole trade. So, as we've said before, when you have those quick gains in your hand, you should take some profits off the table, because knowing that this is a very volatile market and those profits might vanish in a heartbeat, just as they appeared in a heartbeat. So when you've got the heartbeat on your side, do take some profits. And this is, I think, the third or fourth time this has happened. So in this kind of choppy environment, expect that situation, and therefore you can make it work to your advantage. When you have that profit, do take, maybe take a third or a half off the table, and then at least you lock that in. Anyway, I will turn it over to Gil.
Okay, good morning, everybody. Just want to warn you all that I'm having a new roof installed on my house, and my office is actually on the fourth and highest level of the house, right underneath the roof. And it just so happens that Murphy's Law would have it that they're doing the roof right over my office right now. So you may hear some banging, you may hear some guys singing very loudly in Spanish. We get that too. And hammering and sawing and whatnot. But hopefully this microphone, which is allegedly noise canceling, will work out pretty well. I think, if you go back and you look at last week's webinar, at the time it looked like things were getting pretty ugly. I think it was right around in here. And we looked like we were rolling over on the NASDAQ. Volume had picked up, I think, the day before. And then the market reversed and volume picked up. You can see that here 6 days ago on this chart right here. And it turned back to the upside. And then we got this massive follow-through day on Friday where you saw everything. Every index was up over 2%. The Russell 2000 was actually leading the charge. And, just out of nowhere, everything is suddenly launching to the upside. And I think what it underscores right now is that we're in this choppy phase. You can see after we had this sharp breakdown in January, and everybody let me know if for some reason the noise in the background does make it through and you can't hear me, so I can... They don't saw continuously, so they will stop. In any case, I think you're in a choppy area here. You can see this. You're basically in a range. If you go back at the last 2 weeks in this sideways choppy range, you undercut the lows yesterday, so they reversed it again, and the NASDAQ closed in the upper half of its range. And you saw the S&P and the Dow as well actually turn to the upside. Now, what's interesting here, let's see if I get this right. Is it the RUT or the RUS? It's the RUT, okay. The Russell 2000 actually has been outperforming lately, and that makes sense because you've been seeing the big cap NASDAQ names like Dr. K was saying, Netflix, Google, Apple, LinkedIn, even Facebook coming under some pressure recently, but so far it's able to hold the top of the prior base just around 110. All these names, Amazon as well, all these names are seeing money leave in droves, and so they're being sold off. So that that brings up the question as to whether you're seeing just money coming out of where it's gone into over the past couple of months as a liquidity crisis starts to brew. What I think the January dive was all about is forced selling. And having spent 8 years of my life advising institutional investors, they don't sell really unless they're forced to sell or cut back, because they stay fully invested all the time. So they'll either go defensive. Some of them can raise some catch, but it's very rare where you see an institutional investor with a charter that allows them to raise cash in a bad market. So they'll go defensive. So they mostly have to keep their money in the market. But if they start getting redemptions, or you see banks running into issues, they're going to start selling because they need to raise liquidity. And so you get this phenomenon that I call forced selling. Actually, it's a term that Bill came up with initially, forced liquidation. So forced selling, they've got to sell, and they're going to sell down to a level where they feel comfortable and they raise enough cash either to meet redemptions or to reestablish liquidity levels on their balance sheets, like banks may have to do that, and other financial institutions. And right now with the drop in oil, and everybody wonders, well, isn't the drop in oil positive for the market because it's cheaper for the consumer? They're kind of missing the point. If you think about it, the Fed has kept rates near zero for the last 6 years. And so you got all this free money out there, and what's happened? In the process, governments and companies have levered up, and the oil industry levered up big time because oil was over $100 not too long ago. And everybody's pumping every drop of oil they can out of the ground, and they're financing it by taking on huge amounts of debt. So now you've got all these companies. I think Chesapeake is on the verge. Yeah, look at this. This is a $3 stock now. It looks like it's on the verge of going bankrupt. And so this is really what the issue is. The price of oil dropping, and even if it bounces 10, 20% from here, it's still at a level that is so low that a lot of these oil producers are unprofitable, and they will not be able to service their debt. And if they can't service their debt, banks that are heavy holders of oil industry debt are in trouble. And I saw a list of several of them, maybe 8 or 9, that could run into serious problems because of the amount of debt. So the amount of oil that they have. So what you're seeing here is something like the housing crisis back in 2008, when all these institutions had mortgage bonds and various mortgage-backed securities, and so everybody was levered up in mortgages, and that was their undoing. Now you've got a situation where a lot of institutional investors and financial institutions are levered up in oil bonds, and if those start to come apart, and we've seen the high-yield market come under pressure for a while. What's the symbol for that, Dr. K? That high-yield ETF.
HYG.
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 I should be able to remember that. But in any case, look at the weekly of this. You can see this all started coming apart back around when you saw the Russell 2000 and the New York Stock Exchange Composite Index, the broader indexes in the broader market, topping way back in May and June. So we know that the Russell 2000 and the NYSE Composite have been in bear markets, and they're in bear market territory, and they actually mimic this, and so you're seeing there is a correlation to what's going on here. So you have this situation where the financial system is subject to bouts of forced selling, and what happens is they come in and they just start hitting stuff, and they got to sell everything. That's why some of these things, it looks like they can't sell them fast enough one day, and then once they get to a level where their liquidity levels are at least deemed comfortable in the short term, they stop. And with all the algos out there, all of a sudden they just come piling in on the long side, and they push everything back to the upside. And so that's what happens, you know. And so you're subject to all this volatility. And the problem, as I see it, is that there are plenty of catalysts out there for a liquidity crisis hitting at any point in time. And so it makes it a very volatile and dangerous environment. I think that explains why you're seeing this choppiness. Let me get this right here. This choppiness in the NASDAQ composite along the lows. It's trying to, it's doing this sort of Wyckofian retesting, you know, where Wyckoff will say you have a low on heavy volume, and then you come back in to test that low and retest it a few times possibly. And that's what you've got going on here. So, you know, the markets are kind of tracking sideways. They could break to the downside. They could jack to the upside, and it could all happen in a moment's notice, and it could move in both directions on the same day. That's just kind of how strange it is. And so the only way to make money, and I'm going to speak from the authoritative position of somebody who is making money this year, and even as of today, my account's making new highs for the year. You know, it's nothing incredibly huge, but it's still steady progress is being made by taking a short-term view. One book that I've been rereading, it's a Wyckoff book. It's My Methods for Trading, Day Trading Stocks. I think everyone should check that one out. It's an old book. Let me get the exact title here. Give me a second. But in the book, Wyckoff goes over the mentality of the day trader, and I was just rereading it, and a lot of it is relevant to what we're seeing today. You know, I like to come in with a lot of cash every day. I don't hold any much overnight. I mean, I'll hold a couple of positions maybe, but they're generally small, and I don't stick my neck out too far overnight. And I come in, and what I find is that they're gapping it one way or the other, and sometimes you can fade the gap or go with it. On Tuesday, I elected to go short with the gap down, and a lot of names I went short that I found that were up, like LinkedIn and Netflix, actually made good money. But this is a great book, I think, just to get a sense of how Wyckoff thinks in an environment that is short term, and I think that it's very relevant in this particular market. So I'm just seeing all these names. You got Tesla, Netflix, Facebook, Google, Amazon, Priceline getting hit, Microsoft getting hit, Apple's hanging up there a little bit, Baidu's getting hit, Yahoo's up a little bit. But you're just seeing these big cap names getting hammered. So. And I think that is just telling you that money's coming out of these names. It's been piling in, so it's, you know, pile in, pile out. And whether it rotates into something else, like maybe the smaller caps with the Russell perking up, is, you know, it remains to be seen. It's My Secrets of Day Trading in Stocks by Richard Wyckoff. For those of you who aren't familiar with the Wyckoff, Wyckoff, as in Frank. Anyways, it's available on Kindle. I've got it on my my iPad Mini on the Kindle app, and it's interesting. Discussion of the short-term view of the market. So let's just see if I like this one quote here, and he talks about the day trading tape reader. He says, first, he must be absolutely self-reliant and self-determining. So that's why I'm always harping on people thinking for themselves or learning to think for themselves and not being afraid to think for themselves. A dependent person whose judgment hangs on the advice or passing words of others will find himself swayed by 1,000 outside influences. At critical points, his judgment will be useless because he has not been able to exercise his, quote, judgment muscles, end quote. They are weak from inactivity. So, you know, you got to use your mind to give it a good workout, and your judgment muscles grow thereby. And so that sort of speaks to what I'm always hitting people on, which is learn to think for yourself. And we had a guy the other day asking about Cray on this day as a Bible gap up, and it's like he wants our approval, but he was dead right on it. And I saw the gap up. It's a thin stock, but if you have a small account, you could play that, and you just use the low as a stop. So if you see a Bible gap up, any Bible gap up, you can play it if you want to, as long as you operate by the rules of the known rules that we use of handling Bible gap ups, and that worked. And you can see it's still working. But I encouraged this individual to think for himself, and he did. And I think he's making a little money on this, and he did it all by himself, and that's what I like to see. Anyways. My Secrets of Day Trading in Stocks is the title of the book, Steve. So somebody's talking about Intrexon. There are some 5-day pocket pivots. This right now is getting a lot of play because of the Zika virus. They have one of the companies that they own makes an antidote to the virus, and that's why you're seeing this get a lot of play. So, and I think it bottomed out when all of that started to hit the headlines. I don't know, Dr. K, have you contracted the Zika virus yet? Is your head shrinking?
Well, I don't know if you read that link I sent yesterday, but the U.S. is now saying that it's got an issue now with apparently Zika spreading throughout U.S., and they're going to use that as an excuse probably to step up the vaccinations that are already underway.
Yeah, so, you know, how that figures into big earnings for Intrexon, maybe you've seen this many times before. There was another, what was it, the swine flu virus? You had a company that took off when you had the West Nile virus, there was a company that took off. When you had Ebola, there was a company that took off, and then they tanked once all the craziness and fear subsides. So, if you want to try and play that and you think there's some fundamental basis for buying this, I guess you could if you want to use the 50-day moving average as a stop. But you're basically looking for a news push, I think. And it's not really clear to me because you haven't seen this take off on the news that it all really adds up to big earnings for this company, for Intrexon, which admittedly was a great stock back in here, if you guys remember last year. So, but I know because I have several friends who are brokers, something like this, like my buddy over at, he's now at Merrill Lynch, been all over the place, definitely whores himself out for a big check for shifting firms. For any of you who are brokers, you know what I'm talking about. But he says just something like this we can do a lot of business with because everybody wants to come in and buy it, and they'll do it. So, I suppose more power to them, even though I think brokers in general are pretty feeble. Sorry, you guys who are brokers. Anyways, let's get to some SJB provides some trade opportunities lately. What's that, Scotty? What are you talking about? Let me see. The short high, yeah, that's an interesting ETF. So it's short high yield, and you can see this kind of looks like you're getting a voodoo pullback into the 10-day and the 20-day moving average. So that looks interesting. Okay, let's get to some names. And I've been back and forth on this market, short or long, depending on what I'm seeing in individual stocks. And I've been focusing on a small number of names. I have liked the quality solars, and I've messed around with all of them. First Solar, has acted well since it found support at the 50-day moving average, and it bottomed with the market a couple of weeks ago on a short-term basis. SunPower is another one that bottomed with the market, and it's actually moving higher. It could potentially, if it trades more than, let's see, 1, 2, 3, 4, trades more than, what do we got here, about 1,640,000, say. This could be a 50-day pocket pivot. It's coming right up into the 20-day, and earnings for First Solar and SunPower are due in a couple, I think, week after next, so in a couple of weeks. You had Sedge, Solar Edge, one of my favorites. Here you got a pocket pivot breakout. You actually did have a pocket pivot yesterday. I thought about buying it at the close, just maybe a small position, 2,500, 5,000 shares, something like that, just to play with it. And of course, I probably should have, but this morning it gapped up over 30, and I think it ended up coming all the way back in. So now there is no gap. I thought it would be a Bible gap up, so there is no Bible gap up now. But it is a nice big volume breakout, and this is a pretty strong situation. The only problem is how well can it swim against the market tide? Or if the market's tide is just a big whirlpool that goes nowhere, is it able to make progress? And there are some names that have been able to make progress, but my tendency is to look for things that aren't your standard breakouts. You can see this thing, big run up, and now it's come all the way down. I think this was what, 110, 5, 10, 15, 20, 21 weeks on the downside, and you're coming back up the other side now, 10, 12 weeks. So this could turn into a pod, a big ugly pod, post-IPO pod. So you get the big run after the IPO, and then it just gets decimated, and now it turns around and it could head back to the highs. So if the market improved, this is one name I like. I actually bought it this morning. They pulled it down to 28. I was buying it just above 28, and I just sold it. So I'll take a couple of bucks, 5% or so, and just say thank you very much. I'm out of here. And that's been the case for a number of other names. CyberArk has been one that actually works both ways, off the 50-day a couple, 3 weeks ago, and it ran into some resistance. I think we talked about this, and it came down, and then this was a Wyckoff-ian type of low in the sense that it retested this low here. So this pullback here, should I use my handy-dandy little pen here? Yeah, this pullback here, okay. Oh, that's a crummy color. Choose color. Here we go. How about black? I like black. Okay. There we go. This move here was testing this low, okay, but you filled the gap in here. So you come down in here, you fill this gap. That's more or less straight. And so when I'm looking around, and notice the volume in here is light, so there's not any heavy selling. I'm looking around at the market turning last Thursday, and it was right after we did the webinar when all of a sudden I saw things shifting. And you see some names in positions where Wyckoff-ian lows and retests are everywhere, but there are no breakouts. And that's what's interesting, like as Dr. K was saying a little while ago, this follow-through day on Friday, you really saw no breakouts. You got Facebook, you know, trying to run up and break out, and that's about it. You don't really see any strong breakouts. So in the past, when we've seen powerful follow-through days, we've always seen a bunch of breakouts and at least a bunch of pocket pivots within bases, and you don't even see that. So, you know, that tells you you're either sitting there doing nothing, or you're looking for sort of offbeat ways of buying stocks. And what I do is I look for Wyckoff lows, and my work on Wyckoff lows stems from my work on the short side. So when I try to short something that looks grim and it turns and rallies on me, I ask the question, why did it do that? And what I've studied and noticed is that a lot of times it's a type of a Wyckoff low where you're either undercutting a prior low, which is a spring, as Wyckoff calls it. I call it an undercut and rally, so whatever. Mainly because I'm emphasizing the fact that the undercut fakes everybody out who sees it as a break of support, and then it turns and rallies. But in this case, you're filling the gap. So there's one concept, right? Filling a gap, and you find support at the lows of the gap of the rising window here, or this would be a rising window. So this would be the low of the rising window. And then you jack up above the 50-day. You're holding tight with volume drawing up. So I'll catch this here, and it's good for about a 5, 6, 7, 8% pop. And that's about it. And then it comes in and on the here on the pullback here, but it's very light volume, so this one might be one to keep an eye on. So another one I went after is get rid of that. Well, how do I do this? Is Cree. It's got to be commands for that's based on the keyboard. I'll have to check that out later. Maybe I need to take a GoToWebinar tutorial, but you know, I got time. I don't like to waste my time. I have better things to do normally. But in any case, this one was setting up. We talked about this maybe last week, but you can see this is an ugly pattern. It's basically been coming down, coming down, coming down. So it's, in a sense, it may be sold out. In fact, if you read the new short selling book, I actually talk about this as a hydra with shoulders. So you got two heads and shoulders, so it's a two-headed hydra with shoulders formation. I think the hydra name came from one of the members here. So, but here you have this range here now. It's starting to break out, but it's holding tight. And for any of you who look at this type of stuff, I guess you could say this is a reverse head and shoulder. So that's a bullish pattern, and it's been hanging tight. You had a pocket pivot 5 days ago, so to me that was probably viable, or was viable on this little pullback. And today you're getting a pop. Could have bought it early this morning, and bingo, there it goes, and then sell it. Because market was up 100 and what were we up 130 at the peak? Now you're up measly 25 bucks. You're down 10 on the Nasdaq. Yeah, it's looking grim. I'm looking at what's up. So yeah, here we go. Insta short. Workday hitting the. Give me 1 second here. I'm just looking at my list here. So I'm showing. Whoops. Anyways, you can see Sedge pushing 30 now, so that's actually doing pretty well. But here we go. Try this again. Sorry guys, I'm just checking some stuff here. This is a live webinar. I do trade. And anyways, let's see. Okay, I'll try this one. I'm going to short 2,500 shares of Workday. Whoops. What's going on here? Let's take a look at this. Yeah, it's just bouncing back up to the 20 line, so watch for this to cross confirmation. So market's giving it up pretty fast here, though. Nasdaq down 11, NDX down 23.77, so it's down over 0.5%. So here we see this phenomenon of money coming out of these larger cap names. So Uh, Somebody says, thanks for sharing your home improvements with us. Well, I wasn't really trying to, but I just wanted to give you guys a warning in case you hear strange noises. Okay, where was I? Let's see. Other names that actually worked out pretty well. Okay, so on Tuesday morning we come in and we're going to gap down at the opening, and so I immediately started looking around for things to short. So LinkedIn came to mind primarily because it was running up towards the 200-day, but remember you have to watch both the weekly and the daily charts on these, and I noticed it was right at the 40-week line here. So bingo, short that. It gets hammered for 2 days. It undercuts this low. I figured it was getting a little bit long in the tooth at that point, so I covered. Another one that I hit was Netflix, which ran right into the 10-day moving average, and this one was exceptionally weak because it really didn't go anywhere on last Friday's follow through, which is right here. It's 5 days ago, 1, 2, 3, 4, 5 days ago on this chart. You can see that it was down on the day. So when I got the pitch up into the 10-day line, I figured, okay, this has been a weak name. I'll go ahead and hit on the short side, and boom, you get 10% plus in 2 days. So, and that's the only way to make money in this market. And so I'm just showing you guys this and showing my longs just to show you what I'm doing to make money. But you can see that number one, you're buying things in hairy positions, you're shorting in reasonably good positions, but stocks are so far down in their patterns that the danger is that they're going to snap everything back on you, and that's what they did yesterday, which speaks to the fact that if you're going to short, you absolutely have to stick to your downside price objectives, even though the market looks like garbage when you do it. And that's what I do. I stay disciplined based on what the stocks are doing and what I'm looking for, rather than fixating so much on the indexes. And I found that more or less keeps me out of trouble, at least so that I'm able to make progress so far after the first month of the year, and doing so steadily. So the proof is always in the pudding. If you're making money with a particular method and way of operating, then you know that that's probably the best way to operate, and I would say it's probably the only way to operate in this market. It's not an easy environment, but it is fun. I have to admit, it is fun. Let's see. Any other brilliant questions? No, I guess not. We have a shortage of brilliant questions today. So let me look around. So here's some names. Nike was one. This is one I shorted actually on Tuesday, and it came down, but I covered it yesterday at the 10-day. It rallies again today. I should have hit it again. It's breaking down. It's probably headed for the 200-day if the market continues weak, but it's down $1.20. I'd rather short these things up. Remember last week I was talking about microchip, MCHP, as they were rallying up into the 50-day line, and those things have rolled over. That one, chip, what was the other one, LL2C? This one's kind of rolled over, but not really. But I think a lot of them ran into trouble when integrated device just got pummeled after earnings on the big gap down. Can that be viewed as a shortable gap down? Well, I guess it could be, but it's really, you're down at this level. See how you see these lows along here? So you're down in an area of support, so a little bit difficult to figure this out. I'd love to see a rally back up to the 200-day line, which is 2283, so you're not getting that. But wow, look at Sedge going. It's going 30.48 now. I'm seeing it print. Now that's a monster stock now in this market. Look at that. So we're starting to roll back to the upside after coming back like we're going to head into the red, deep in the red. Nasdaq down 3.5. But you see how this market is just so volatile. I still think if I sold close to 29.80, I guess it was. That's close enough. This thing's all over the place too, and I think the general market environment is risky. So if I have profits, I'm gonna take them. So my thoughts on FB. Well, FB as it turned out, we were talking about this last week, and I was looking at this as possibly a short because it is a late stage breakout coming straight from the bottom. And so I was looking for some sort of failure. It didn't happen. So in hindsight, and even probably in real time, you could sort of feel it. If you put a short out in this, thinking it might run into resistance and reverse back in, given that it was coming straight up off the bottom, you would feel it, because I could feel it. And then you just turn around and go long, and the thing runs up a little bit more, and then they just start hammering it. And it's been holding the 110 level. It was a low today, 109.25. So it's roughly holding the top of this prior base. You can see that here, and it's pulling in. I don't know what volume levels look like this morning. Let's take a look real quick. You're gonna notice here's a gold stock I got up here, ABX. The golds are looking pretty good. All right, give me that stupid. I gotta do up here. Whoops. How about it? There we go. Volume is up 103.2% for this time of the day, so not looking so hot. So, my thinking here is if the market holds up, maybe this one holds up. But what I think is happening here is FB had some great numbers. And, you can't get fired if you're a professional money manager running a mutual fund or whatever, a trust, whatever. You can't get fired for buying Facebook. So what I think's happened here is money's been piling in, and as it pulls back, they're trying to come in along the 110 level, a little bit lower. We're right at 110, what, 110.96 right now? Is that right? Yeah. 110.94 on the last print. And so there's money is flowing into this, but the thing is, if the market gets into more trouble, you could see this fail. So that's another thing I'd be watching for here. I tend to think that Facebook has had a nice run. This looks a little faulty, and at the very least, I think it needs time for the 10-day to catch up. And so I would not, if I bought this day, I would have been selling into this because you're getting nice 10% move in a couple, 3 days. So in this market, I think you take that. And you can argue about that, whether you want to try and play a trend, but I think only a moron tries to play a trend in this market. You take what the market's giving you if you can figure out when it's going to give you something. And you can make a trade using a very tight stop, or at least having a reference point for a tight stop. So you want to keep risk under control. So, with this, you could have bought it and used the low here at 104.81 as your stop. If you bought it somewhere 106, 107, that's reasonable. And so, you could have caught this, but once you get 10% on it, when it's rallies all the way up to 117.59 was the high, you could take that and then see whether you want to buy it back. But I'm thinking eventually they're going to start selling this. So Google, I shorted this on Tuesday as well, and I was watching this. Now, you guys know the Jesse Livermore century mark rule, and then we use it in reverse for the short side. And so when a stock fails at a major century mark level, in this case 800 on the Google A shares, the GOGL is the A shares. And people ask me, why do you pick Google with an L rather than just Goog? And I guess this one's a little more liquid. It trades a little more daily volume, and it's the Class A shares. So, I just kind of did the alphabet thing, since the name is now Alphabet. So we'll go with the A first, and then look at the I guess there are no B shares. Maybe there are. There should be. But the C shares trade under GOG, so just in case you're wondering. But same concept, really. It approached the 800 level. It didn't get that close, with about 1.5%, and then it failed. But the other thing is you have this sort of sloppy breakout straight up from the bottom. And so it looks vulnerable to me. And I would, the earnings, I guess, on Google were enough to manipulate a gap up opening on Tuesday morning, but you couldn't really hold it, then everybody sold into it. So this guy's under distribution now, and he busted the Google busted the 50-day yesterday. So I'm going to go back to Google, and now we're below the 10-day and the 20-day. So now I'm looking at a rally up in the 50-day at 757.01 now on the Google, the A shares, as a short sale point, or you can go to Goog if you like that one, 739.53. So I covered yesterday once they blew through the 50-day. In hindsight, yeah, I should have held on to them. But in this market, like I said, if I can get a decent breakdown, and from a perspective of points, you're getting like 50, 60 points on this turkey off the highs, on the breakout, you got to take it. And if it is probably, well, I'm going to guess this is going to eventually top and roll over if the market does. So this is a late stage failed base setup, LSFB as we call it, in acronym form. In acronymical form. Is that a word, Dr. K? Acronymical? Or I'm making up words again? Well,
the language is always organic. So I think if you use it enough, it becomes a word.
Yes, there you go. Somebody says for Schwab users, Google is not borrowable and Goog is. You're right. I found that out yesterday. And so, or actually on Tuesday, I couldn't borrow Google, the A shares, but I could borrow the C shares, which is what I shorted. So, and I don't know why Schwab's like that. My thinking is Schwab sucks. I need to switch brokers. So, anybody got any good suggestions? So, I mean, JP Morgan was good on the institutional side, and that's a good place to trade. But Schwab is, I don't know.
Just make sure that they are from the buy and sell stops if you use them, and I would imagine a number of good broker services would.
Okay. Let's see here. Somebody says, in this market, 3 days is a trend. You got it. It is, and that's about it. Let's look at
That was February, middle of this month.
What? You're breaking up, Dr. K. I'm going to forge onward.
No, I'm just saying middle of this month. I think they repeal.
They repeal what? How about if you text it to me and I'll read it?
All the stops, I believe, unless. Okay.
All right. Anyways, where were we? McDonald's. Okay, breakout here. Let's see. What does Dr. K have to say? You're going to get that problem. They repeal all stops later. You're talking about stop loss orders, right? Is that it? Yeah.
Yeah, that's right.
But some brokerages are still honoring them. Yeah, that whole thing, I don't know what to think about that. I never use stop loss orders that are set in the system. I just have them in my head and I operate that way. So I know some people do that, but it's a good way to get screwed these days. And a lot of people got screwed on August 24th, the day of the infamous capitulation Monday flash crash thing, where a lot of these stocks printed lows and instantaneously, and the next thing they're up 2 or 3 points 2 seconds later.
Using mobile.
Somebody says I've had good luck in IBKR Interactive. I've heard Interactive Brokers is good, so I don't know. All right, let's look at BLK. Someone's asking about. Yeah, if you guys have some questions, far away. This could be considered a short. I think BlackRock is in trouble because they own a lot of oil bonds. That's what I've heard. And this is one of these situations. They've been, you could look at this as a big, ugly head and shoulders, or even a fractal head and shoulders here. And this is, you could draw a line along the lows here, I guess. Let me get my pen. We'll have some fun with this. You could draw a line along these lows, and then once you broke, so here's your head, your left shoulder, your head, your right shoulder. See that? Or you could look at it this way. This is a massive elephantitis head and shoulders, and then the right shoulder of that is a fractal head and shoulders. And you draw the neckline from here to here, and then you get a breakdown. You're rallying back up towards the neckline and the 10-week moving average. So that looks pretty decent. Whoops. So that's a possibility. Yeah, I mean the high of today is what, 316. You're trading. Last trade was 302. So you're kind of off of there by about what, 4%, 5%, a little more, a little less actually than 5%, a little more than 4. So that's a possibility. There's a bunch of these though. There are several others. You guys remember, was it First Trust, FRST? No, FTRS? No? Look that up for me, somebody. First Trust. I think it was. But and Northern Trust was, oh, that was it. Northern Trust. Yeah, see, this is another one, and I think these guys own a lot of oil-related securities. So they're screwed. And you can see it in their stocks. And yeah, these make pretty good shorts. So I think Goldman maybe does as well. Give me a second, you guys. I'm gonna. Okay, yeah, Goldman looks the same. So you see that in all the financials. Okay, here we go. Down 29, down 30 on the Dow, Nasdaq's down 22. So now we're starting to give way here. Yeah, I just had a little bit of this one, and I just wanted to dump it. So, I mean, it's holding. This thing had a Bible gap up. These guys make VoIP, voice over Internet Protocol phone services, and they provide texting and web conferencing with it. So it's the only service that does it. So it looked pretty good. But with the market starting to suck here, I'm not really going to sit here and take any heat anywhere. I'm just going to bail. Took my profits in Sedge, Spew or Cree, any of that. That's done. Now gold. Someone's asked about GLD. This is tough because it's moving now, and it's telling you that the Fed is probably not going to raise rates. Okay, I don't think they're going to do anything else for the rest of the year, and I think they're likely to do something more radical. They're talking now about negative interest rates. So the Fed is done. Okay, one and done. They're going to reverse that, I think, eventually. Because of the liquidity crisis that is looming or that has been ongoing but is now starting to really percolate to the surface. And so I think with the Fed doing nothing, you're seeing gold rallying, and you get this pocket pivot up through the 200-day. But you had one up here, okay, and it didn't go anywhere. So, and this is what it looks like on a weekly chart. So could gold be bottoming? I don't think you buy it on a technical basis. I think you buy it on a fundamental basis if you think it's a hedge. And when I bought my gold, which I still own, I bought it between 280 and 320 back in the year 2000. And it was based on the premise that, number one, I was flush with a huge amount of profits from being up 1,000% in 1999, and I wanted to reallocate that money. And with the Fed playing easy money at the time, and you could see the dollar starting to devalue, I just decided to take the contrarian trade at the time because the Bank of Russia was selling and the Bank of England was selling. And so that's when I bought it. And it was basically a fundamental trade or a hedge against devaluing dollar, and it worked out pretty well. But now I think you may be seeing a bottom on that basis. But when I was buying, someone was also mentioning silver. You remember that, Dr. We made a bunch of money in that, in AGQ back in 2011. That was a very beautiful thing. And I went on Fox Business when it was trading at about, I don't know, 28. And Stuart Vaughney was trying to hammer me as some charlatan or something, and trying to ask me where the price of silver was going. And the way I trade, I don't really have any price objective on the upside per se. I do when I'm shorting. But on the upside, I let things go until they stop going, and or at least I used to when we had more trending markets. But back then, I said to him, well, $50, and in fact, that's pretty much what we hit. I think the futures actually hit $50. And I remember we were talking that morning, Dr. K, and we were watching the futures on silver hitting $50, and we decided to unload. But we bought it down here when it was underneath 20, right here, and you had this pocket pivot. What's that?
Yeah, the pocket pivot breakout. It was beautiful.
Yeah, right there. You had the pocket pivot, and if you go back in the archives and you go back to August 2010, you'll find that report. You pocket pivoted through the 10-day and the 20-day moving average. So either or, then you gap up on heavy volume. So it's like a viable gap up, I suppose. But at the time, if we go back and look at this on a weekly chart, you were actually seeing silver coming out of a base after it was in an uptrend. So this was the buy point here, I believe. Let me see if I get that right. Yeah, that was late August of 2010, and this is the breakout. So you were actually already in an uptrend. You were coming out of this well-formed base at about 18, 19 bucks, and it ran up. So now the situation is far different for silver. You're in this position. So and gold is the same thing. So I think if we look at gold back then, it was also coming out of a base at the time, wasn't it?
Yeah, gold has done that times in its over 15-year period. It was
right here. It was right here where it was coming out at about the same time. But silver had the leverage in it, I guess, at the time, and that was a beautiful move. But gold also had a nice move. So you can see the positions when we were playing these on ETFs back in 2010, rather using ETFs back in 2010. These things were already in uptrends, and they were forming bases. They were coming out of the bases. They were forming or having pocket pivots within the bases. So they were looking pretty good in terms of being set up nicely. And now here what you're looking at is just ugliness, And so, but you come down, and you've been undercutting lows and trying to rally back above them the whole way down. Here you undercut again. And now we're turning back to the upside on gold. So, the other thing here is that you are seeing miners suddenly on fire. Dumont Mining, but that's the position you're coming on up from there. Royal Gold's another one I noticed. And that's the position on that one too, but you can see it moving. Gold, Rand Gold's also doing the same thing. But you can see the positions are very difficult to decipher. And so on that basis, you know, it's tough to figure out what you'd want to do with gold or whether you'd even buy it. The other thing to keep in mind is that if we do run into another 2008-like liquidity crisis, everything's going down. I mean, didn't gold tank with the market in October 2008, Dr. K?
Everything was tanking, including gold. No safe haven.
Yeah, and that's the concept of forced selling. You know, when they got to sell stuff and raise liquidity, everything goes out the window. Even the kitchen sink if they can get a good price for it, you know. So that's the danger of buying into these. And I own physical metals as a hedge, and I've owned them for a long time, for 16 years now. So probably the only long-term investment I've made. Well, along with my wife, but and those are both have been great investments, right? I hope she's listening. So, anyways, somebody says LoJack has an interesting looking chart, worth a look. Now I went and shorted some of this Workday, and they're pushing it against me. That figures. Anything I do during the webinars, well, they're being bought out, I think, so I wouldn't mess with that. Somebody says. Chuck says, I was with you during the silver run. Thank you very much. It was the biggest piece of cheese trade I have had, trading for 12 years. Thank you. Well, you're welcome. We did pretty well with that too. So, and I looked like a genius on Fox. So one of my rare opportunities in life to look smart when it hit 50 bucks. And they even invited me back on to do a victory lap. So don't go on anymore. So I do need to get on Stewart's case, since I did hear him say a couple of weeks ago that he hates charts. It's like, okay, tell that to your doctor next time he does an EKG. All right, so where are we? You know, I'm looking at this thing just trade back and forth, and the question in my mind is, do I want to go long something here? Do I want to trade something short? Do I want to go golfing? You know, I don't know. It's a tough market to figure out here, because all you're doing, again, and we can see it here. Let's look at you're just chopping around. So are you going to break for the lows? Maybe you are. Maybe I should look at some more shorts here. Let's do that here. Let me just run through my list. Here's one rallying into the 50. Buffalo Wild Wings. I don't know. Maybe this looks like a big head shoulders. You can see you got a neckline along here. It broke the neckline once. It's rallying back up into the 10-week line. So this might be a short, you know, using the 10-week line or the 50-day line as a stop. This sort of neckline breakout, because this is a big ugly head here. Okay, so you got these little teeny shoulders, big head, teeny shoulders. But you also see a little fractal head and shoulders here on the right shoulder, and it breaks. So you can draw a neckline in here. Let's get my pen again. I'll get the hang of this, so I'll hopefully be quicker. If you want to draw a neckline along, I'm not so hot here, but let's just draw a neckline like that. You see you're rallying up into that ascending neckline, and the 10-week line. So you could use one or the other as a stop on the upside. This looks kind of garbagey. Let's see. Okay, so first I got to erase all drawings and do that. Okay, I'm getting the hang of this. Let's look at, someone's mentioning NXPI. I guess, you know, this might be a possibility. The only problem is you're way down here. So, but you know, chip area looks pretty grim, and it's been pretty sloppy. I might look at something higher up in its pattern, just because it's may be all sold out. I know Skyworks Solutions is another one that's in a similar situation, and it's kind of rolling over at its 20-day line. So it's possible these may be good for some 10% moves down towards their lows if the market comes apart, which it's sort of looking like it wants to, but it just doesn't really give it up. You know, I think the question is whether we get another round of forced selling, in which case you're going to see some nasty stuff happening here. So let's continue. Mobileye. This one I have to laugh about, because I think right in here, O'Neill and company turn this into market underperform, or market perform. So I don't know when they started using that kind of BS language, what brokers use to basically mean nothing. So what does a market perform? I mean, the stock was a short up here on the pod failure at around 56, 58 bucks, and now down here it's a market perform. So what was it here? Market outperform? You know, that's pretty sad. I don't know. sorry you guys, you have to listen to me rant about that, but it really kind of disgusts me. And I think they're defying their roots, you know, when they start going that way. I mean, you know, I don't know. Anyways, let's continue. Okay. These have been kind of ugly. Mosaic, but look at this, ugly. All of the ferts have been ugly, ugly, ugly. How about the rails? Rails are getting railed, basically, but they're trying to rally today. They're always rallying something. See, and what happens a lot of times is because, remember this idea that institutions have to be fully invested at all times. When they dump something that's had a big upside move, they'll go after something that has a low PE, or the PE has contracted so much after the thing has been hammered into the ground, because they can't lose their job doing that. If they say, well, we bought, you know, Union Pacific at 8 times earnings, you know, yeah, we went down 10%, 20% from there, but, you know, we can paper our file and justify it so we don't lose our job. You know, I once had a guy tell me that if he was up 100% in a year, he would be fired. Doesn't that sound odd? I mean, those of you who know the business know that that makes perfect sense, because if so, the board of the mutual fund or whatever, the trust or whatever he was running, would look at that and say, well, to do that you had to take on excessive risk, and we don't do that, and you're fired. So that's the way the game is played. Stick to your charter, paper your file to justify your decisions. So you want to have analysts telling you that something is cheap, or you buy low PE stocks because, you know, everybody knows that a low PE means something is cheap, right? And so you'll see these names that have been beaten down, you'll see them rally. And that's why I talk about when things are so beaten down, money may rotate that way as it's coming out of other areas. So what I'm always looking for on the short side are fresher setups. So, you know, so to me, Google is the freshest. I mean, you know, that's like a baby's butt in springtime, so it's that fresh. Actually, if you have kids, it's probably not that fresh, and you know what I'm talking about, but I'm trying to come up with some useful metaphor there. But in any case, it's a fresher one because it's broken down. Now, Facebook, if it busts, would be a fresh one as well. So, you know, a lot of the names that I made a lot of money with last year in August were all fresh. So, let's see. Lulu has had a long run since they missed earnings. They have. And, you know, an example of something gets beaten down and they start pushing it back up. I think this is coming into a shortable area again, because you're coming up into this the underside of this base from which it failed a long time ago, last year. Well, not that long ago. Depends. The younger you are, the longer ago that was, because everybody knows as you get older, days are like minutes and weeks are like days and months are like weeks, and it all goes like that. Your perception of time shifts very quickly, so everything passes faster when you're older. So from my perspective, not that long ago, but in any case, rallying up into the underside of this base. So yeah, this could be setting up. What are your reference points here? You know, you've got, you could draw a line along the lows here, but it's really pushing into a zone of resistance. So you look at this pattern, where do you see most of the congestion? Probably right around the 62, 63 level in here. And so that might be something that is coming up into shortable range. So I know with Nike in trouble, and Nike's a fresh situation as well, failing at the 50-day, it could be headed a lot lower. And UA, Under Armour, looking like it might fail. This one had a big run up on earnings and got close to the 200-day here, and starts to run into some congestion here, and I mean, optimally I'd like to hit this at the 200-day, but it may never get there. Now it's back below the 50-day, so if you wanted to short it, you could use that as a tight stop if you think it's going to peel away to the downside and break down. So that's something to look at. AEM, we got a couple of minutes left, so that's another gold stock. You know, again, I'll just go back to what I was saying about gold stocks. If you're buying here, you're late, so you know, on top of that, again, even gold stocks, if they start liquidating this market again in a big way, everything's going out the window, and that includes these. So, what I'm actually put it a little bit out, but it's not doing anything for me. Now, you could argue that this is deep down in its pattern, but this is what I'm looking at. If you look at it this way, Okay, you can see had an IPO back here, had a big run up, and now you get this left shoulder ahead, and now this big right shoulder complex. But now you've got this sort of little fractal head and shoulders forming in here, and you've broken down, and you're just below these lows. So now these lows become resistance, to me at least, and so far that's worked out that way. And I still think thinking head down to 50 bucks or lower, back to where it started its life, because it's an infinite PE stock, and when they start liquidating things, the first things that go are the infinite PE stocks, because there's no theoretical value there, and they can't justify holding a name like that, so they're going to go. Anyways, so there you have it. I think we're looking for fresher ideas on the short side. Some stocks work on the long side. It's just a crazy environment, but I think net, depending on whether you could break down now or you could get a rally here. If you had a rally and the market's a little higher and some time for the 50-day to catch up, and then you push into the 50-day, that would give you a better reference point. And also, a lot of these stocks might actually be in better position as shorts, and some of them are so far down in their patterns, And I would watch LinkedIn is coming out with earnings after the close. Maybe that'll give you a shortable gap up tomorrow, so I'd watch for that. Somehow, I'm thinking they're going to gap down, but we'll see. I don't know. I could be wrong. Anyways, that's about all. It's 9:04, so we've gone for an hour, you guys. That's all I've got. And somebody wants to what? Gold and silver are getting a bid. Maybe escape velocity. Maybe. I mean, but if you're going to buy gold and silver thinking that you're going to get a big upside run here and make a lot of money, then at least know where your out point is if you're wrong. So it's that simple. It's not not rocket science. But to me, it's in an extended position. Like I said, if they start selling everything in this market and a liquidity crisis ensues, everything's going. So you'll wake up one morning and your wonderful nugget and GLD and everything will be down big. So not worth the risk in my view. So anyways, that's all we got, you guys. Thanks for showing up. We will catch you next week and see where this market is. Maybe it's going in a completely different direction by then. So we'll catch you then. Take care. Have a great weekend.
So long, everyone.